Hi, everybody. Let's have a good week. As Diego says, it's a new week. It's a new month. We turn the page on the calendar. And the theme of this broadcast today is I just want to make everyone aware that there is no law that you have to trade with all the event risk that we have this week. Maybe your broker doesn't, want you to hear things like that, but hey, I have a broker. And there are times when, being a technical trader, trading on leverage, where say $1, $2 move in WTI is a big deal to you. It's a couple grand on a one lot that, you can just wait for the OPEC meeting to be over. Of course, I know, you have to fight FOMO. In fact, I had to do it today. I put it on a small piece and, it looked to me like we were going to head to new highs. But first, let me cover the dollar because this was pretty important, what happened Friday. I don't know the whys behind it, but, I've been talking about this 93.50 level for a long time. I thought it would break down, and that's what it did. But there was no way I knew that it was going to break down and in the same day negate the breakdown. And huge candle, huge dollar strength going into the end of the week. Almost makes me think that the market is looking for the Fed to be maybe more on the aggressive side on the taper, maybe 20 billion. Anyway, this changes the picture in the dollar. And, you could talk about the euro, that if you look back at past videos, I thought we could rally to 117. That was a headline that we had last week. We didn't quite get there. I'm sorry. It was 1692. So, didn't get to that level. And I said that I wasn't going to be ready to turn bearish a dollar unless euro traded above 1750, not only traded, but closed above it. So, now we have the dollar in a position to maybe complete the move that we talked about. It may seem like years, but, for a long time, been talking about the dollar having the potential to rally to 95, 96. And, looks like we're flagging here unless we take out last week's lows. But looks to me like with yields and what the yen is doing and the way both euro got cracked and the pound, these are dailies, and the pound got cracked. Okay, so even your strength, relative strength, was selling off along with the yen continuing to try and move up. We're getting a little bit of a tail here. That's probably because NASDAQ is down, but I don't think that the yen peaks until, even if we pull back again, this is a level I want to get long at. So if it's going to go, it's going to go without me. But I think the dollar now has a shot to make a move up towards this 96 level. Okay, and maybe the Fed is going to be the catalyst, and maybe it's going to be the NFP. We also have BOE. So there's so much event risk this week that that's why I say you don't have to trade. I know it's hard not to trade. If you want to do anything, you could probably scalp in or day, but I would not be building positions in a big way until the event risk of those particular instruments are out of the way. Like, after OPEC's out of the way, I may try crude. In fact, if you've been following me, you know that I've done quite well, even though the trend has not turned down by, selling rips in crude. But, I reassessed over the weekend, and sometimes when the markets aren't running, you're a little clearer and you see things. And I noticed this the prior 2 weeks, but you see this RSI reading that we have on the daily in WTI. There was a little divergence at the next peak, right here, but it was above 80, okay, which is not ideal. Your best turns happen when the RSI stays below 70, which is, what we're approaching again. And I would say even if we made new highs and we're only, a layup away, it was 85.35, I believe, last week. And we head up to what is starting to look like a megaphone formation to me, and it's a broadening formation. They're really the most difficult thing to trade if you're a position trader, because markets make higher highs and lower lows and higher highs and lower lows. But the upper end of this megaphone formation comes in around 86.40. So I want to see what RSI structure looks like in WTI after the OPEC news comes out. And if I have setups with RSIs not confirming, if they blow out the divergence, I'll just let it go. But if we're getting divergences while we're up here, I may take a crack at it now. But I'll show my human side. I tried it here at 85.05. I didn't like it. It just started rallying in my face and took a 50 pip hit. Okay, I said I don't like it and got out of the way. And it was really just FOMO. So I have to fight it every day and, tell myself that, what did you say this weekend? You're going to wait for OPEC. But anyway, so now I am. After having to learn the same lesson 1,000 times, we all do. Sometimes we have impulses, and impulse trading's the worst. The right thing is to recognize it. Not that we couldn't have failed here after a higher opening, but to me it looks like we have to clean out the last spares and go for the stops over last week's highs. The pound, I think you have to sell rallies in pound now. I mean, there could be some big downside in cable. Cable has been outperforming euro, and I don't know why we can't attack this 134 low down here, especially if the Dixie is on its way to 95, 96. I think that cable will not be able to withstand the strength in the dollar and continue to perform on the upside. I think it'll have some problems. And if you really want to take a big kind of longer term, yes, that's correct. Sometimes Luis is saying sometimes it's better to do nothing and just wait for your trades, and otherwise you're under duress. And event risk, I think, is high this week. This could be the most important Fed meeting in a long time. People are, wanting to hear the details of the taper that we're going to have. So, that's event risk. BOE is event risk. OPEC's event risk. The NFP, I mean, we've been having weak numbers. For the last several reports, they've been disappointed. What if we get a strong number this time, along with a little bit more hawkish Fed? So I just want to show you guys something that I talked about with Michael V on our last broadcast. I think I told him I was looking ahead, and I thought that NASDAQ could make a new high without a couple of issues that are important in the NASDAQ 100, which to me is starting to show cracks in what used to be leadership in the market. So here's the NASDAQ. We made new highs, right? And by over 130 points. But what did not participate? We all know Facebook took it on the chin, right? So that's no big surprise. But look at this. Apple didn't, 158 is the old high. Here we are with the NASDAQ at new highs, and we're 10 bucks under the high. So that's a crack. Microsoft has been the monster that's kept it going. I still wouldn't fight this one. Netflix has been doing okay. It's kind of a parabolic advance, but Amazon, pretty weak earnings, along with Apple, took it down, and Google's got to hold on too. It's making new highs, but there's some massive divergence, very glaring divergence on the daily with Google at new highs. So there are cracks beginning to show up in NASDAQ. I still think there's potential for 16,000 in the NAS, but you're going to see the breadth narrowing even in the FANGs going forward, which, I was thinking the market could hold up into December, but we're approaching some levels that I thought it would take until that time for us to achieve. So we're going to keep an eye on this. Maybe we get a pullback and one more shot, but I would definitely be raising cash, back here. And it's not that I was a perma bear. Okay. I was bearish here and then covered in early October, where, NASDAQ wasn't doing what I thought it needed to do when it was breaking these two important lines. It was closing back within it. I didn't reverse, I didn't get long, but, my bearishness completed that cycle. And now I'm waiting to do it again. As you can see, we do have some pretty glaring divergence on the weekly here in NASDAQ. Look at the last high in NASDAQ. All right, so that 7-8% correction has generated enough weakness so that we're making new highs without momentum confirming this weekly move in the NASDAQ. Same's happening, not as accentuated as it is in NASDAQ. And I actually think NASDAQ's going to be the bigger percentage loser. And one other event I'd like to see happen before I start getting short is IWM, which has been range bound for, it feels like, I don't know, an eon. And maybe we're going to get this breakout now. Looks like it's coming out to the upside. Okay, so maybe we trade 240. So we're getting closer, but I think out of this long of a consolidation, and a lot of people are going to get excited about the Russell breaking out here and going to 240. I think the first breakout is going to be the fake out. So I think we're going to break out and fail up around the 242 level. So Russell's going to be something that has been gaining relative strength. It's the last one to the party, and it's the last one to make a new high, and it's the last one to top. But I don't think you're going to find a refuge in Russell stocks either when the next sell-off begins. I've been having discussions with different analysts that kind of think that I'm a little bit off the wall when I talk about China. And China would probably like to keep everything together, and they have some choice until I think Olympics start the beginning of February. But they are going to follow through with their deleveraging process. They're not going to bail out everyone like we did here in the US. I don't think they're going to come back with big QE. And I think they're committed to this process of deleveraging, which is going to cause, deflationary ripples already happening in the real estate market. And I really don't think that China entering very slow growth, for them, a recession is 4% growth, right? They used to grow at 10 and 8 and 9. So 4%, if they ever get to no growth, that would be like a depression in China. And I think that a lot of people are, for example, I heard today with a trader friend of mine that I talked to that the Fed doesn't care about China. Okay, I'm thinking, if we're going to start to taper, along with all the programs that have ended and all the cash flow that a lot of people had to spend, is that China will become a bigger factor. And I think they're going to be behind what happens in the next deleveraging around the world. And maybe that's even going to exacerbate the tightening by central banks globally. Okay, Canada, Russia, Let's see what the BOE does. So talk of us raising rates next year. So it's going to be pretty interesting. I predict that maybe the globe enters a tightening cycle, and then when the deleveraging in China starts to, they talk about contagion, and it's hard for me to believe that there isn't any risk of China, the way the world has interrelated with them financially, that there couldn't be any risk. So, we're not going to get an Evergrande headline. That's when people start thinking about it, but I'm still thinking about it because they helped pull us out of recession in 2009. I think they're going to take us into one in 2022. So I think it's not a black swan, it's a dragon. Yeah, that's right. Okay, maybe. That's an interesting point, Rich, that China would hold it together. There's also a chance that we may boycott the election. I mean, the Olympics. It's possible with the way relations are between the U.S. People that make the analogy between Joe Biden and Jimmy Carter. I believe Jimmy Carter boycotted the Olympics. I'm not sure where they were held that year, but I know a lot of guys call President Biden Jimmy Biden. They're normally conservatives, and they're saying he's another weak um, uh, Democratic president. Basically, that's what they're saying. So anyway, that's something that I'm, maybe they don't, because a lot of these things, I thought maybe the S&Ps could go 4650, 4700, and we're only a few good days away from that. So maybe we do have a peak in December. I mean, everyone's looking for a melt up the rest of the year. Maybe October will, gave us, maybe this is the melt up right here. We're in it, and we're not at the beginning of it. The beginning of October was the melt up. So we're a month into it already. But this bothers me that the NASDAQ is making new highs here. It's down 40 today. It's not acting great today. With this kind of RSI divergence on the weekly, a little bit on the daily, but most other TFs, it still has too much momentum for me to short there and there. So I'd be watching S&Ps 46.5 to 47, and maybe NASDAQ's not that far away from 16,000. It could do that. So I'll be paying attention to that. But 2008, the difference between now and 2008, Rich, is China's a much bigger portion of the global economy than it was, 13 years ago, right? So, that it'd be even more impact. So we'll see if they could hold it together till March. You know what it'll tell us? The markets will tell us, but very good point. So we're getting a pop in gold, but this could still be a rally to sell when you look at this, pretty impulsive here. This has the look of a flag. So, I'm not ready to short gold, and I'm also not ready to buy it. So if I'm in between here, what do? I just watch it, and I have a couple of ideas where I think I'd want to buy gold. And this kind of has the look of a flag. 1808, 38 from here would take you down into the 1745 level. Silver, even though we're up today, I still think there's a chance when you look at the daily right here that if we could get back under this moving average, we could put in some type of right shoulder between here and 22 bucks. Worst case scenario, we get a 1, 2, and a third drive down here. And I would expect that to happen with rates going up. yields higher, higher US dollar yen. That correlation connects and disconnects all the time. So what I'm going to do is prep you for the next, few days, so we're ready, and when the dust settles, we could engineer some positions and some trading ideas. And guys, I do post them here in our main chat, so you guys could come in here and see what we're all thinking, and also feel free to add your work to the body of work that we have in TradeGATEHub.com. I have a real interesting guest for us on Thursday. Andre Cardoso from Portugal uses harmonic patterns to trade. They're very interesting patterns. When I first heard about them, you hear about Gartley's and ciphers, and there's crab patterns. There's all kinds of animals. Anyway, Andre will be with us tomorrow. Mike and I are going to bat things around, talk about the Fed, talk about sectors, what Mike is doing, getting a little bit of a reversal in S&Ps right now as well. So really, I think that for the market to continue and crude making new high, glad I got out of the way, not a new high for the move. But I think any kind of top or relief from OPEC could extend the rally in stocks. If it's going to keep grinding higher and exploding rate of change higher, I think we're going to have some problems based upon what energy is doing. People are accepting, just like the 70s, that we are in an energy crisis. So we'll see what happens up at my little red megaphone line in crude, and I'll be back here tomorrow with Michael Venezia, and we'll see what Mike is thinking about these markets. And we are selling off pretty good. So the first cracks are showing in NASDAQ, and to me, one of them is Apple not being able to trade at new highs, with NASDAQ making new highs, Amazon as well. Doesn't rule out that Amazon can't bounce and still try and fill the gap, but it doesn't look good. Tesla remains parabolic. Some people are saying it still looks cheap. I need Dramamine. And Facebook, Meta, why can't it rally halfway back, rally back to 350, 360, but the highs could be in. So that's going to be a wrap for me for today, guys. Remember, no one has a gun to your head to trade. There's a lot of event risk. So prudence over valor, live to trade another day. And this event risk is just, you're going to have probably some major volatility there. And if that's the case, your 100 pip stops aren't going to mean much. So let's wait to trade when it's more about trading than gambling or betting on a red or black outcome with major events like the Fed and OPEC and BOE and NFP. So good hunting the rest of the day. Remember, don't just count your pips, count your blessings. And I'll see everyone tomorrow with my partner, Michael Venezia. Mike's going to talk about stocks. We were talking about cyber last week. He has complete coverage of the market and a great grasp on where the money is going. So if you're a stock trader, tune in tomorrow. And Mike will cue you in. Adios, everyone. Enjoy the rest of your day. And remember, you don't have to trade. Sometimes we're paid to wait. And as Tom Petty said, he must have been a trader, Tom Petty, because that tune, waiting is the hardest part. Huh? You ever hear that song, guys, in the room? The waiting is the hardest part. I don't know if he was probably talking about chicks. What do you think? Or markets. Anyway, it's the same thing, right? All right, guys. See everyone tomorrow. I want to thank the team for producing these videos and getting the stream going and getting the community prepared for these broadcasts. Mike will be here in an hour. Okay, so stay tuned for Mike's show in an hour as well. I'll see everyone tomorrow with Mike. Adios.